Talk winners and losers with our financial expert, Rob Black. Rob, always glad to have you, even though we're talking about a lot of losers today, starting with the markets, huh?
You know, it's been an interesting hour because it was a loser about an hour ago, and now it's break even. There's a funny phrase on Wall Street that's going to make me seem like a horrible human being, but when the missiles fly, it's time to buy. So typically it's an artificial dip that goes away pretty quickly in the Middle East because the strikes are typically a weekend, maybe up to a month, so says Donald Trump. And then it should go away, and maybe we'll get, how shall we say, a different leadership in the Middle East that wants to be more of our friends than our enemies. Oil's up 8% today. Gold's up 2%, sitting at $5,300 and $5,500 an ounce. That's a flight to safety. You know you got it. It has no exposure to the Middle East. You know, it's a hard asset that people like. But defense contractors like Northrop Grumman, RTX, Lockheed Martin, they're all shooting higher. ExxonMobil and Chevron. It's really a short-term trading situation from Wall Street's perspective.
Okay. Is the hit on travel short-term, you think, as well?
Again, it could be a rough month. You're going to see higher energy prices. Like I said, oil's higher. That makes marine fuel and jet fuel more expensive. So there's really no big disruption for the airlines. They don't do a lot of flights, you know, some to Israel, but not much in the Middle East. Cruise lines, they're only stopping in the Middle East about 4%. So it's weird. You're seeing Carnival and Norwegian cruises down 6%. You're seeing United and Delta down 2%. It's fuel cost. It's the craziest thing. So it's not passenger disruption. Major airlines, you know, they just don't do all that many flights. So that's going to be a short-term blip too. Again, it's a weird thing to say, buying opportunity for a lot of people in my industry.
All right. Let's take it prehistoric here. You're talking about a Triceratops skeleton that's about to hit the auction block. What's going on with that?
It's pretty fascinating. I look at stocks and bonds and real estate as assets. Trading cards like Pokemon cards are considered assets. They don't make any more dinosaurs, and this one's in perfect condition. 66 million, well, it's not alive, but it's a 66 million year old Triceratops, which you and I remember from our childhood was a herbivore. And it was probably the first dinosaur we ever really was able to figure out because it had 3 horns. His name is Trey. He's going to go for $5 million. He's 17 feet long. So I don't know what exactly you and I would do to store him, maybe put him in our backyard. But this is actually the asset market for like fine art. It goes through these weird cycles. But this is an asset market that I've never seen before. Dinosaurs. Last year, a Stegosaurus went for $44.6 million. So it's a hot market right now, even if the stock market's not at all-time highs.
And that was just a random person who bought it. It's not like a museum. Because when I'm thinking about this, I'm like, okay, do museums bid on this? But I guess maybe people buy them and then donate them perhaps to a museum or something.
Obviously, the insurance on something like that's going to be crazy expensive. So you kind of hit on how the museum world works. They borrow art from owners of the art, and they pay for the insurance. So the owner doesn't have to cover that insurance, and the world gets to see it. So there's a weird business model there.
That sounds about right, though.
You know, billionaires lending out their dinosaurs for covering the cost of insurance.
Well, we had also earlier today, we were talking about a skeleton of a tiny little, like almost bird-like dinosaur that's been found in South America, I believe. So dinos are in.
Dinos are
in. Slow ski season, though. This is another loser we've got this morning. What's going on there?
Yeah, I was just up in Tahoe this weekend cleaning up from a big ice event, so to speak. But it's been a really slow snow season. It got off to a slow start, and now it's turning into a snow drought. You really got to go into the high elevations to find good snow. In the Sierras, we're about 68% of normal. Again, more of a John Drabel weather talk than somebody like me, but I see it. Skier visits are down 20% year over year. Dining at the high-end restaurants are down 15%. Snowmaking is super expensive for one resort. It runs about $3.5 million to put artificial snow on the ground so that they can keep going. Tahoe pulls in about $600 million a year in economic activity in restaurants and skiing. So this year they're going to have about $100 million shortfall. And unless there's a miracle March, it's going to be a bad season.
Yeah, I mean, just this last couple of weeks when we got all that snow, but that's seemingly kind of it for the rest of the season. A pleasure. Thanks for joining us. If you've got any questions for him, those are all the ways you can contact him.